Dan, thank you. We've got this thing called the fiscal cliff coming September 30th. We've got the negotiations over this $3.5 trillion package, which is likely to be wound down, but will probably include, tax hikes. Are the markets on a macro level? I know you're a bottom-up stock picker guy too. Are they underestimating some of the risks here?
I think so, certainly in the short run. But to be clear, in the longer term, continue to remain bullish, mainly because, where else are you going to put your money? Stocks remain the best place to be. As you know, Brian, we've talked a lot about small cap stocks. I think in particular, small cap will fare very, very well through this period, but we're going to have to go through probably a month or so of the debate, a lot of changes to the bill. And some of those things are not going to be investor friendly. And I think the market perhaps hasn't taken it all in yet because the debate is just about to start. There's going to be some wild proposals that'll be out there. And, the bill's going to be probably 150, 200,000 pages long. There's going to be a lot of stuff in there that's going to be very difficult to understand what it is. And it'll have some, it'll affect various sectors of the market, but it could also affect the market in general, particularly on the tax side, which which to me is most concerning because it really takes away from the earnings picture going forward. Now, again, these are proposals. These are things that are out there. It's, as you mentioned, it's likely going to be scaled back significantly. And obviously, the president's political capital is much less than what it was before, too. So a lot of things are playing in a deeply divided House and Senate where there's really almost no margin for error. So whipping up votes on both, on the part of the Democrats is going to be critical. They can't lose anybody.
No, but the Democrats also, on the flip side, Dan, have an incentive to get things done to sort of get Afghanistan off the headlines as well. We've got, by the way, Pinto's Libby Cantrill coming up in a few minutes to talk more about what actually may be in this massive bill. From a stock perspective, Dan, you've talked to us about companies like Danaher and others. Are there still, even if we get higher corporate taxes, higher capital gains taxes, I've got to believe for you and your clients, there are still good opportunities out there.
Look, necessity is the mother of invention. The best companies respond to changes. And again, these are going to affect the markets in the short run. If you own too much stocks and you don't have enough cash on the sideline, maybe you want to reevaluate that since the markets have done so well so far. But to be clear, it's going to present a great buying opportunity if there's a significant pullback in the market. And when I define significant, I would say, in a range of 5 to 10%, because again, we're early in an economic recovery. We're still perhaps only mid-cycle. It's just a matter of how deep lawmakers go from a tax perspective and how much that impacts the corporate profit picture going into 22 and beyond, and also the timing of when a lot of these tax increases get implemented. Again, it's a long list of questions that we have right now. We're going to begin to get some of those answers, and we may not like some of the answers that we get.
Is there a capital gains rate at which the market simply can't sustain the number? I think that, 27% is suggested. We've been there before. We've been higher than that before, and the markets did just fine. If the president gets his way, we get to 27% on a macro level. Will that be, for lack of a better term, okay for the macro markets?
Yeah, I mean, you're speaking on the corporate tax side. I guess the number being bandied about is I'm asking for 27, but I'll take 25. That's one component. Then there's this international tax, which is really complicated. And from my perspective, the OECD countries, all they've really said is that they acknowledge that they're discussing this. Hasn't been agreed yet. But it's going to be really difficult to. I don't know how they implement a global tax like that. It seems like it could invite a lot of cheating in various jurisdictions because a country will just say, "Well, I'll lower mine," just to get more business into my country. It's just a lot of things. It's one thing to have these proposals, but then how do you implement them and make them actually work and generate revenue? So again, these are all questions. And of course, as you well know, the market doesn't oftentimes like the uncertainties that go along with some of these things. Because again, a dollar of increased taxes is a dollar less of corporate profits, and stocks rise based on corporate profits. But the key thing is focus your portfolio on quality. And the definition of quality, companies, as you know, we've talked a lot about companies with high financial returns, companies generating free cash flow. Those are the companies that are going to be able to actually take advantage if there is any market dislocation as a result of this.